What is going on, traders? Hope everybody had a great Monday. It is June 12th, and here we are the day before CPI. Before we get into it, of course, don't forget that this video is for educational and entertainment purposes only. And if you'd be so kind, don't forget to smash that like button. Really helps out the channel be brought out to more people. And if you aren't already subscribed, please do so if you're enjoying the content we are providing. And don't forget to turn on those notifications. Alright, so as I said before, we've got CPI tomorrow. We're going to keep it short and sweet. Of course, with such a major data release, anything can happen, and put a knife in any type of technical analysis. But we'll look at a couple of key levels and some areas that I am interested in. But of course, we'll have a little bit better of an idea of what's going on in the markets until after the print at 8:30 tomorrow. First thing I wanted to go over, though, were some of the major bank CPI estimates. JP Morgan around 4.2%, Morgan Stanley 4%, Citigroup 4%, Credit Suisse 4%, Goldman Sachs 4.2%, pretty much an average around 4.1% is what the consensus is for the print tomorrow. How close or far off they'll be is really anybody's guess, but I think that is a healthy area, that around that 4%. So we have an idea if it's coming in a few points higher. We could maybe poise ourselves to be a little bit more bearish depending on the price action, and if it's in line, perhaps bullish, or a little bit under, certainly very bullish for the markets. So that is worth noting overall, that 4.1, 4.0 number. So now, one thing I want to mention, and I was kind of talking about this in some other videos before, you're hearing and you're still, the peeps from the bears are getting quieter and quieter, but you got people have their macro theses and everything, and here we are basically at yearly highs on the market, and if you could see the low here, right, from October, and what do we have after this? The next major area, lower, higher low. Next major area, higher low, higher low. So structurally speaking, macro, what macro schmacro, follow the chart. There's been really no indication that anything's been bearish according to the chart. I've been saying this since we were over 400, and just all I can really say is our main job as traders is to follow the price action. Certainly we've got our theories about the market or the state of the economy, but the chart rules all. Price action, having a plan, a bull and a bear plan, like we talk about every single video, is key. And that way we're set up for any scenario that we have, and then we trade around it appropriately and accordingly. So it's just I saw some funny posts by some people. Are bears solvent? Because they keep trying to short this, and there's just nothing. There's nothing for them. Yeah, we've gotten a couple of little plays. I've done a couple of short swings, right? We were talking about a short up here in February that we did. We did a short here. We did a little short here. But those are little plays, and we have realistic expectations. And I was talking about this before. There's a difference between people using this crazy verbiage about a crash versus a retracement, right? And that's really the key thing now. So with that out of the way, we are firmly here above volume point of control firmly above all the major moving averages. Now we are getting a bit extended from the moving averages here, which could suggest a potential retracement. Again, I'm also kind of talking all things being equal, as if we did not have data tomorrow, but CPI could come out at a 6 tomorrow, and we could go all the way down to 400. I mean, who knows? But but all things being equal, market just seems to want to continue higher. Now, could we come back and retest this structure? Yeah, totally. I think we could, and I think that would be potentially healthy price action. Get a little cool down, and then we go ahead and continue our way back up, right? So we were also looking at this bull flag that on Friday tried to break out, couldn't break out. We were watching that 432 area, couldn't break out, pushed back down, but today they continued and pushed us up higher. Now, was this just a run from the institutions to exit their position as the markets were driven up higher, and the institutions are slowly selling out of a position, so that way they have less exposure, using this move as exit liquidity? Sure, that's possible. But does that mean, of course, that we're going to get a hot print and drop all the way down to 420 or 411? No, not necessarily. But that is something that was in the back of my mind today, as we were trading higher. But beautiful flag. We were looking at this and got the continuation up higher. And ultimately, now I'm starting to look, and without CPI, just overall speaking, the way it looks to me now, I'd be kind of looking more towards that 435 area, over that 437. These are kind of bigger targets. I don't necessarily think we'll get there tomorrow, but these are kind of bigger targets that I am kind of looking at now. And if we are able to take out that 437, 440 area, next I'm looking for around 448, 449, somewhere real close to that 450, and possibly up by this 3-year daily value area high at 452.65.60 zone. So these are some bigger targets. It's another $20 from here, but it certainly is possible, and that would kind of push us back up to this base that we broke down from back in, when is this, November or in early December, a while back, what is this, 2 or 3 years ago. So I'll be watching this for a potential area, because there's probably tons of liquidity here. You saw what happened when we broke, tried to get back above, did a little fake break here, came back, retested this area, and then we saw the sell. So if I had to guess, as far as where major areas of liquidity are, it would probably be up in this area, but we've got a far way to go there. And of course, we just take it level to level, step by step, and it doesn't, just because I think we have a potentiality to make it to 450, 452 doesn't mean we're swinging puts for the grand slam and trying to get all the way up here. That's just something to keep in mind. But looking at the yearly volume profile, certainly getting pretty thin up here. You saw earlier I was on the 3-year, so there was a lot more space on the volume profile, but at least on the yearly, getting to the top of this profile here, which would definitely raise some caution bells to me. And now we are finally starting to see the Momo get into those overbought conditions. It can certainly go up higher than this. We've talked about this before. We've seen readings up in the 14, 13 fives, and right now we are just, let me just pull this a little bit higher. All right. We're at just under 12 now, 11.84. So still a little potential room to go, but we certainly are getting a bit spicy up here, and that's definitely something. This, in conjunction with at least being at the top of the yearly profile, that for me do caution some. Oh, do caution some hesitancy on the longs, and like I was saying in a couple of the last videos, even though we have grinded up higher, the risk to reward for the long without seeing a bit more of a retracement first is the risk to reward is not that good in my opinion right now for new positions. Let's wait for data. FOMC too. I mean, we've already talked about how crazy this week is as far as the data is concerned. So I'm still urging everyone to be cautious, be smart. Not a time to be pressing on the gas. Even with even with the day trading. Although today was a pretty easy day to trade. Probably could have gotten away with a little heavier size, but I was following my plan, and my plan was to be defensive this week. It's not going to kill me if I'm not pedal to the metal, and because of course any trade, I'm talking in hindsight, that we saw that beautiful rally today. Did I think we were going to break over that double triple top around 423 or 420? 432. No, I didn't really think we would get above that today, but we did, and we saw a really nice squeeze. All right, so let's get into the price action today a little bit more, and then we'll look at a few other levels for tomorrow. Real quick, let's just see if there's anything to go over on the fib and channel. I've already readjusted for the new swing high. Not too much here. And what we were talking about yesterday is the first thing, that needed to be defended, right, was this channel, right, this consolidation of the flag that we were in. And we were talking about if this, and I still have it marked out here, if this 429, 60, 65 area, 50 or 429, 55, you can even call it, just somewhere in that zone, 429, 50, if that held, or if it broke below and was bought up quickly, showing a fake break to the downside, that we probably would see higher prices come into the markets. And that worked out nicely today. I only took one trade. I didn't do any options today. Options volume was so pumped coming into CPI and FOMC today. I did not touch any options. Great day to be an option seller, though, taking advantage of that high IV. But I just did one trade on futures and pretty much held it all day. Of course, I didn't get the top. I pretty much got all out at 43.70, but I didn't think we were going to. I didn't think we were going to squeeze up another 8 points or 10 points after that, which we did. But that's fine. I don't have to catch the whole move. I just need a little bit of it, a little bit of the move, and I am good. So let's go into some of the prices that I'm looking at for tomorrow, and I'll be kind of speaking in the discarding that we have CPI, so we'll have to see again what it's going to look like in the morning, and that's really anybody's guess. So as we were talking about in the weekend prep video, we held this 429.64. We didn't even get close to it today, and we had come down in this area. I was noticing that these cells were getting absorbed, right? When they were getting pushed down and absorbed, pushed down and absorbed. I was watching that 430 area, which of course whole number there, big psychological zone. And I don't think we even clipped. No, the lows today was 430. 13 abouts, so I was really enjoying the risk to reward here. I did this on futures, but 20 cent risk here basically. I believe I got in at 430.55 on futures, and I was risking just under 430.50. So 5 point risk for me on this trade. If you had taken this trade on options, probably, risked about 25 cents or so. If we really confirmed under 430, been out of the trade, right? Or depending on your risk tolerance, really, you could have held down into this area to make sure that this held up. I mean, this was the real pivot that needed to hold, because this was the breakout of the consolidation of that, the breakout of the consolidation sideways movement that we were in. So it's the same thing now, right? You can see here we took out the local highs from Friday, and once we did, it was that 432 area. And once they did, boom, big breakout. And pretty much this is where I got out right before this this move. But I still got about 14 points or so on my trade, and that's great for a Monday, which I hate to trade Mondays, especially going to big data, on top of it. So I'll take 14 points any day. But what a move there after we broke over that 432. So it's a very similar situation as we had last time, right? We have broken over. Now we had the breakout. Now what's Bull's job to do? It's their job now to defend this breakout, right? And that's going to really be my pivot. 432 is going to have to hold for the bull case for me to stay valid. And as long as that does, then, I potentially too would be interested in some direct longs or recapture longs in this area, depending on, of course, what's going on. If we're coming down, but CPI print came in hotter than expected, okay, maybe I'm not going to touch this. I'm not going to catch a falling knife like that. I'll wait to see, what happens in price. Maybe we come back down to retest the consolidation area here too. And if price action starts to slow down, I'm not catching a falling knife like I said before, but if we're selling, price action starts to slow down, okay, maybe then I would be interested in some longs around in this 429.64. Direct long, of course, is a bit more risky, but if we broke below, recaptured, held, okay, then I might consider that long trade from there as well. I don't really have too much of a short idea, but I'll throw a couple out here for you guys. Okay, so say we get up to 435 tomorrow, we break above 435, but then it is sold back down. I might start to look at that and say to myself, okay, this looks like a fake breakout over 435. I'll wait to see if any buyers come back into the issue, and if they do come back into the issue and it's sold back down, that'll be a bit more of a confirmation to me that 435 was a fake break, and then I'll be looking for a retracement, possibly down to retest the liquidity of this breakout. If in fact this 432, 431.60 area cannot hold, then you'd potentially have a little bit more of a confirmation for a short, a retracement either back down to today's low, or if they can break below, I'd probably be targeting for this 429.60 area, right? And that's that base, and there's probably going to be a lot of buyers in this area, plus probably shorts that either got trapped or and that need to cover. But you have to definitely be careful, because I'm sure there are a lot of bulls who also came into this kind of chasing, and there could be some potential late longs that end up getting trapped and giving a lot of supply for us to sell down lower. But so if we do start to get below that 429.60 area, really gonna need to see 429 get taken out, right? Friday's lows, and then we can start looking at these lower levels back into the range that we were trading in before, just taking it level to level, midway point at 428, and then 427, 25, 427 even, and then look to these lower areas. I'm not really too interested. I mean, it doesn't, just because I'm not interested in the short trade, doesn't mean that I wouldn't take a fake break or some type of retracement. But really, we're not, in my opinion, we're not going to see too much of a major retracement unless we break, right, the bottom of this channel, which we were trading in before. So certainly under 425, 80, 75 zone. Okay, then I'll start to really think about a deeper retracement down lower. But unless that happens, I might even be interested with taking a long trade on a recapture or this 428 directly as well. Looks like it's raining. So yeah, that's pretty much everything I needed to go over. Let's see what the print comes out. It comes out at 8:30. But again, it's a great week to be cautious, and also considering we have FOMC to deal with tomorrow. I'm not really sure how price will react. It could be a nothing burger with CPI. It goes up, goes down, and then we just chop into CPI because really the major institutions want to see what the Fed has to say with their policies, and that can just lead to choppy and slower price action. So that is something to keep in the back of your mind as well. All right, well, pretty much everything I need to go over. What do you think? Do you think the markets are going to continue to rally? Do you think 450 is out of the question? Do you think we're going to 400? Love to hear what you think in the comments. Only other things I'd have to say about the market, certainly a bit hot here on the Momo on the 30, definitely outside of value. And I'm sure that's all the same we're probably outside of value on every single chart. Yep, here on the 4 hour, definitely extended from that. They're all going to be extended from value. So that probably goes without saying. All right, everybody, I hope you found this useful. Don't forget, like, subscribe, share the video, and I hope you all have a great Tuesday. Let's trade smart, follow our plans, have our levels all prepped for tomorrow, and we'll see you tomorrow.